Welcome, everybody. Hey, Sarah, what's up?
Hello. How is your COVID going?
Um, it is, I think at the tail end, but who knows? So I got COVID about a week ago, and I've been like pretty much like on my back, only able to do like, I don't know, 10 or 20% of what I normally do at work. Today is probably my first day that I'm feeling. So far, so good. But for everybody that's out there that thinks that COVID is not out there, it's still out there. I
Mm.
unfortunately did not get the latest boosters. I think I stopped like, I don't know. I think I got the first two or three. I don't know. I can't even
Are they
remember.
still even giving boosters? I haven't
I,
done it in like a year or more.
I think so, right? I think they're coming out with a new one.
I'll wait for that.
Yeah. So, yeah, I'm feeling good. And I was hoping to. I like doing this podcast too because it always gives me energy talking to other entrepreneurs. So that was one of the reasons that I was like, I got to do this. So we don't know who else is going to be joining us. We think Julian might, but it may just be me and Sarah. And but I wanted to still do it. I think people still enjoy hearing from people who are kind of in the arena and all that type of stuff.
Not
Um,
on the sidelines, in
not
the
on the
arena.
sidelines. That's right. Yeah, exactly. So how's things going with you, Sarah?
They're going well. I am finally back in California after I was in Europe and then Philadelphia, where I was recording the last podcast in the
Yeah.
heat, and feels good to be back in San Francisco.
How many VCs did you run into in Europe?
Yeah. Well, I was in London and Paris, and apparently all the VCs are in Italy, so none. I did
Got it.
not
Got it.
see them. They were, of course, in the arena on their vacation.
Right.
Like, I love, like, in the arena. You're a VC. You are the most out of the arena that you can possibly
Right.
be.
Right. Right.
The opposite of in the arena.
Yeah. I think especially this summer because just so many firms that typically are writing series A, B, and C checks are just like not doing anything. So
Yep.
like this was a summer like they're just taking. I've talked to a lot of friends, yeah, that are VCs that are just like full summer blocked off. And good for them. That's great. They're not writing checks. And that's their job. Enjoy their vacations. But I'm hopeful
Yes.
actually. I think a few things. One of the topics I wanted to kind of bring up on this podcast, there's some signs of life, I think, that we're going to be coming back to a state of uh normality or after the 2021 boom, and then bust, and then hopefully a state of steady investment. I don't know if you can feel that or not, Sarah. I know you're
I,
profitable, so you may not actually be interested in that at all, but
I think it is going to happen, but I think it's going to still take time to hit companies that are like raising a series A, B, C,
yeah,
because it this trickle down effect. And so, we're just starting to see a couple companies go out and IPO, and they're companies that, I think look pretty good.
yeah,
So it's not like a flood of IPOs. Hopefully it'll bring a couple more and then
yeah,
more. Um, but I think it's still like 12 months or more before we're really starting to see a lot of action in
right,
like the growth stage, which is the stage, Winnie's in that I care about. And so
yeah,
I'm not counting on any VC funding
right,
anytime soon.
right,
Or like also other, potential funding that's private equity or anything like that. Like, I
yeah,
don't think it's really yet that we're going to be, sure, deals are getting done, but they're not good deals. So if you can wait, you should count on waiting at least 12 months, but possibly more.
yeah.
Um, so I'm not, it's great to see it, but I still think it's pretty far out.
Yeah, and that's one of the reasons that you went and got profitable, right? Kind of,
Yeah, I think like, we gotta be able to hang on for, if it's 12 months, if it's 24 months, if it's forever. We gotta be able to
yeah,
control our destiny. And I think, companies, it may be shorter, and that would be wonderful. And,
right,
we should get ready to go out if there's money out there or deals getting done, or, exciting opportunities.
Yeah.
So like we don't want to forget about, tracking those metrics and making
Right.
sure we are ready to go and talk about the business, but I wouldn't count on it. And I don't want to waste also a ton of cycles on preparing for a fundraise.
Yeah. There's it's that preparing and then actively fundraising can be seen as such a distraction for the CEO, but also it can also be the lifeblood of the company. So it's hard to make those decisions.
Yep.
Um, I also wanted to know, like, I'm just also just kind of thinking about our audience. I think our audience is for this podcast are like the first time founders. And
Mhm.
one of the things that I never like when I had my first venture backed startup Shyp, one of the things that I never paid attention to was like more of the macro stuff. So like, and obviously you do now as well. And I think make it like explain why we care about like what's happening in the IPO market? Like, what do these things mean? It's because like, and this is like a learning that I've probably had over the last like, I don't know, like 3 or 4 years. And I pay attention more. Like everything kind of trickles down. So like
Yep.
the when you have like your YC company, you go and you are super hot and you raise 5 million in a 25 post or whatever, which definitely is probably not a good idea. But there's lots of companies that do that from VCs and angels, and you kind of need to understand like what is to come. So like to raise that Series A, you need to have VCs that are excited by the opportunity for you to go raise your Series B, your C, and then to potentially go public. So the way that I think of it is that you as a company, if you could kind of look back at the macro picture, so like for a Series A investor to invest in your company, your YC company, they have to really be excited that you're going to be able to raise a Series B and then a Series C, and then they're looking at eventually the public markets. So like if companies are not going public, that kind of everything kind of rolls downhill. And so ultimately that's kind of what I think like more experienced entrepreneurs are looking at as far as like, should we be fundraising? Like, and also investors are as well. Like, is anybody getting any liquidity? At the end of the day, like what we're trying to deliver for our shareholders or investors is like actual like some sort of liquidity event. And so if companies are not IPOing or getting sold or getting bought by private equity or something like that, that just means that and this is where today like Series A, B, and C rounds are really getting held up. It's because they're not these liquidity events.
Right.
That's kind of why I look at it. I don't know how
Yeah.
much do you pay attention to kind of the
Well,
macro
I
picture?
think there's also, I mean, there's that reason, like, are they able to invest? Do they have the funds? There's
Yeah.
also just some nuances of like, look, when you're fundraising, you're talking to people whose entire job is to pay attention to the macro
Yes.
and deploy
Yes.
money alongside these like trends and insights that they're seeing. And so if you're not speaking their language because you're so heads down in your little world of what you're doing, you're going to miss kind of the ability to talk to them the way they like to evaluate companies. I
Yes.
remember back when we were raising, it was like a seed round, or maybe it was our Series A, but I think it was our seed. We had already raised a pre-seed from Homebrew,
Yeah.
and
Yeah.
I think it was Satya, it might have been Hunter. I don't know. They're interchangeable. Um, they were helping us, raise the next round, or maybe it was fill out the round. And they looked at our deck, and we had all these slides kind of going into the nuances of our product, and
Yeah.
they were like, put some stuff about data in there. Like, you guys are dealing with a
Yeah.
lot of data. Like, talk a little bit more about the data. Use that word. And
Right.
we
Right.
kind of redid the deck to focus less on like the design of the product and just talk a lot about data. And it was amazing. Like, that really appealed to investors at the time.
Right.
That was one of the trends that investors were really into, like, how much data are you sitting on?
Right.
We just weren't tuned in to what was really hot at the moment. And
Yeah.
I do think it is important, especially if you're going out and trying to fundraise, that you know what they are caring about at that particular moment in time, so you can kind of tweak the language and the way you talk about things to
Right.
match that.
Yeah, no, that's so important. It's really trying to like, well, and I think in anything, right? If you're trying to do like a partnership with another company, or you're trying to, you're basically selling your company to another investor, like trying to get into their head, like what exactly are they looking for? What's important to them? Of course, it changes for every single person you talk to, including the stage of investment, right? So
Right.
if you're looking to go raise a Series A, it's different than raising a Series B, which a Series B is basically like, you just basically send us an Excel sheet of what your historicals have been and your projections are, and like this is basically what we'll invest or not. And it gets even like it's later stage, even more data driven, and it's a lot less about the product and vision and all these things. They want to see the real
Right.
numbers and all of those different things. But early on, it's like even seed, I would say that it's really about, I know Julian talks a lot about this, to a lot of his coaching clients. It's about like selling the dream. Like that's the one
Right.
time that like you don't actually have data. Also, when I talk to other people trying to start businesses as well, it's like, don't actually have customers. Like the best and the easiest time to fundraise, in my opinion, is like when you have zero data and you could just like kind of like
Yeah.
wave your hands. If you do have some credibility, you've built something before and all that, of course. And then as the stages go on, it gets more data centric, markets centric, competitor focus, like all those different things. I don't know. Do you agree with that?
Yeah,
Have you?
but I mean, I think you always have to sell the vision of where these
Of
are going. Like
course. Yeah, yeah,
even
yeah.
reading through, which I really want, if I ever get free time, I want to create the S1 for Winnie. Like what it
That'd
would,
be cool.
say. Obviously, the financials will be different
Yeah.
if we ever IPO. But you know, it is, you're selling the dream, and like if you, I read through a lot of the Instacart S1. It was like
Yes.
I actually got so excited about Instacart that I put in an Instacart order. I usually do the like Amazon Whole Food delivery, but I was like,
Yeah.
you know what? I'm like feeling Instacart right now. Like I'm gonna try it back out again. And it gets you jazzed about the business and the
Right.
kind of opportunities. So you always, you know, need always be selling, but
Yeah.
it doesn't even stop when you're going public. I mean, maybe more so when you're a public company because you gotta sell the dream to everyone.
Yeah, you definitely always need to be, whether that's investors, employees also,
Yeah.
that's a really important thing. Like, how do you keep people motivated? A lot of it is like, especially when you are going through like either tough times or like even with, I find that people from the outside that haven't like found product market fit seem to think that like product market fit is this magical place that like everything is wonderful and it's just such a great, it is like, and you obviously have hit it as well, like it is excruciating. It is so painful if you hit it, and you are really scaling. Like employees are putting in like 12-hour days, and everybody's trying to hang on for dear life and everything. Is that, and so when you kind of mentioned selling like everything, it's like you kind of like as you as the CEO or founder like need to kind of like like pep talk everybody. It's like, no, like this is really painful. I understand. And also some people just aren't cut out for startups, but like you should be selling. It's like, this is a good thing that we're doing right now. I know it's painful, but like we're in the midst of like of our customers stretching us, our partners stretching us, everything like that. I've always found like especially before we hit product market fit, that it was all, I always looked at other companies that had it to be like, oh, like Instacart would be a great example. Like, oh, the easy times that like they must be having, but it's kind of like the opposite, and it gets
Yeah.
harder. I don't know what your experience with that is.
No, I completely agree. I keep thinking, okay, we just hit this next milestone. Like I could finally
Yes.
relax. Like I can't relax. I just went on a vacation to Europe and I was working every day because that's what it takes to run a company.
Yeah.
You mentioned these 12-hour days, and I might be one of the few putting in those 12-hour days, so I do need your advice on how you're getting everyone to do that. We like we don't have, that same culture at Winnie, for, better or worse. Um,
Yeah, every culture is different. Yeah, that's for sure.
yeah,
Yeah.
I think, it's part of I think what makes our employees stick around so long is that they're
Yes.
not, burning out, but, I think there's also a part of, like you said, I think you're really good at this. I'm not as good. Like selling people on the exciting opportunity ahead and getting them excited and motivated to, not always put in 12-hour days, but sometimes you do need to sprint
Yeah.
to um, a milestone or delivering for some customer deadline or some press event or whatever it might be. And getting people like excited and motivated to do that, not feeling like it causing burnout, but actually energizing them.
Right.
I see you even just for this podcast saying, if we hit this many listeners, we're gonna be able to get sponsors, and
Yeah.
that would mean you don't have to edit it. So
I don't. To be
just
clear, I don't edit it. I spend
oh,
1 hour in the
it's
script and then just post it.
all right. It's still work. Um, Motivating people and reminding them like why we're doing this. I think sometimes I forget to do that with my employees. Like,
Yeah.
hey, remember, if we can get this product out the door, it makes this these 10 things happen. Um, so that everyone always feels motivated to hit that next milestone.
Yeah. That actually, maybe that's a good next topic. Like burnout, and um, that's a topic that a lot of, yeah, and kind of go back to your comments. I definitely, for whatever reason, and maybe it's just because this is just how I work. Yeah, I'd say the majority of our company at Airhouse, we definitely err to working the 10 to 12 hour days. Most of every department, but also every department's different. Um, and I don't know if that's because that's just kind of how I work, and then the company just kind of follows that, or
And are
what
you
that is.
mostly in person?
No. So a third of us right now are in the Bay. We try to get together at least once a week in person.
Mhm.
But everybody else, we hired when we closed our Series A. It was like pretty close to the pandemic, so we hired, yeah, kind of everywhere. Um, but I hear a lot of the I'm working 12-hour days. Like,
Wow.
when is this gonna like let up all of this? And I try to explain to people, and also so myself, I've actually only experienced burnout once, and it was actually at Airhouse, and I had to like take a it was like probably like a couple weeks off basically. And it's kind of funny because my last company, Shyp, definitely had a lot more notoriety, and it seemed like a lot more hectic and all that. But we never actually reached product market fit. And so
I completely disagree with that. I think Shyp was an amazing product and had
we didn't have market fit. We like,
the maybe the business model
yes,
was
sure,
the thing that needed work. I don't know that you wouldn't have gotten there, but I think it had like the truest definition of product market fit, which is like people loved it. Like it was life changing for people. It was life changing for me.
yeah,
You
thank
didn't
you,
have the business model eh, figured out correctly because I think what you've, said in your kind of analysis of
yeah.
postmortem is like you raised too much money. And so you didn't have to do that work, put in the work. I think you would have been able to figure it out. Like you had people that loved it and
Yeah.
probably were willing to pay a lot more to make the economics work.
Uh, yeah, I disagree. Just because I just think it. we there definitely is a business there. It just wouldn't be big enough,
It
and
wouldn't
to
be big
like
enough to support,
a venture scale. But then,
the amount that you raised
yeah,
possibly and the valuations you were raising at, but I don't think that's the definition of product market fit. Like there was a market for your product.
sure,
You can look in DoorDash today. They have Shyp built into DoorDash. It's a
yeah,
feature,
yeah,
and it's like clearly there's demand for that. Uh,
yeah,
and I think your product met that demand, but like the behind the scenes of like the valuation for the amount of money and the
yeah.
business model wasn't all adding up. But I disagree about the product market fit. I think it is like exactly the example of product market fit.
Yeah, I don't know. I definitely have more of a nuanced view of product market fit. I think that you need to definitely be you have to have a solid business model, and we just didn't. Like the only way that business actually worked was at scale, and this is also why I um uh D like, so DoorDash is doing, like, a portion of what we did at Shyp was they do returns for USPS and all the different shipping carriers for, like, 3 or $5, and they must just be hemorrhaging money, and, like, for logistics businesses, it's all about consolidation, so, like, you need to have a lot of different people doing pickups in close proximity or deliveries for the actual economics to work out. It would be it's just and so when now view product market fit as like, not only do you have a product that people love,
Right.
and also there's a market there, but also you need to have a financial model that actually
Yeah.
backs it up. And that was the thing and the reason why I didn't restart Ship, and I will never ever do it, is because yes, I do agree that people loved it, and also as a user myself, I loved it. It was amazing, but you just you can't get that type of service, without having enough demand. And there's
Right.
just and maybe it's a timing thing, like, maybe in the world like, in another 10 years when everybody's selling everything online and, like, people in, like, Facebook Marketplace, and I'm not sure if you're a user or, if you sell things if you're Facebook Marketplace. My wife does all the time.
I
She
don't have
loves it.
time.
Yeah, yeah. Anyways, like that's like the new version of like the garage sale piece. So like maybe in like 10 years when like
Yeah.
everybody is like selling a bunch of shit and like you go to consumers and then it makes sense. But like we 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 were not able people just didn't ship enough. And so like we didn't have
Yeah.
enough people. That was the underlying problem for that entire business. And also another big
Right.
reason that we did fail. Um, could there be a smaller business built on that? Yeah. Am I excited to build a small business? No. So that's why I'm not building a
I'm gonna
smaller
restart
business.
Shyp. I'm
Please
doing it.
do. So it was a funny story. It was actually so it was bought by somebody that tried to restart it
Mm,
and they did not have any luck. I don't know what the hell happened. And I tried to actually buy like the domain and everything from the person that bought it. They never responded to me. I'm not sure what's happening with that. I would just love to have the domain
I
and
have
some
a
of the
great,
assets.
amazing domain broker that got us Winnie.com for basically nothing.
That's
So
great.
if you, I'll send him over.
Yeah, yeah, yeah. But what we're talking about. So
What
we were talking
we're
about
talking about
yeah. Well, we were talking about
getting employees
burnout.
to work
Yeah,
10 to 12
bur-
hour days without burning out.
yeah. But also I think so. What I have done differently this time with Airhouse versus at Chip. At Chip it was really and this is also in the days of like we were in San Francisco,
Right.
we were all in person, we had to compete with like Uber for talent, and Airbnb, and so like there was a huge talent war going on. So it was
Right.
really around like I'd say that we definitely were, like, making sure employees were happy, and so it'd be like, "Yeah, don't worry about, like, not finishing this stuff on time," or
Right.
that, like because, like, I was really worried about people leaving and all that stuff, so I don't think that we were aggressive enough on, like, "We gotta get this thing out because customers are really demanding it," and at Airhouse, I've been, like, very upfront, about with people. I'm like, startups, the reason you join startups are it's not to get rich. Like that is if that happens, if the stock options are worth something, that is a huge bonus. But what I can guarantee you is that you are going to learn more in like a few years, like in 2 to 3 years than you will learn in a decade if you work for a larger company. And also, like I've done this before, and we've had a number of people that came with me before that have experience in startups. Like, we'll also help you, like guide you through the journey. So like we won't have like this um we'll be totally transparent on the journey and what's happening. And so like if you want to go like build your own startup or join an earlier stage startup or whatever else, like you will learn more in like 2 or 3 years with us than you could if you want to go and do something yourself. But
Right.
what with that comes is a lot of hard work. And it's going to be like, and also I looked for people that were very entrepreneurial. They would like people that would just like they see a problem, they can't stop until it's
Right.
actually solved. Like that's what I think of myself. I'm like, if I see a problem, it I have to solve it like that night. Like I just can't not do
Right.
that. And so I look for so it's a combination of telling people up front what they're signing up for, and also looking for people that kind of have that like entrepreneurial spirit built into them. And I think that's kind of like cemented our foundation of just like of Airhouse. And also like even like gonna be I think we have all hands every week, and I try to be like as transparent as possible. So like when it feels like the wheels are and when you do hit product market fit, like it is very uncomfortable, and it does feel like the wheels are falling off.
Right.
And it's gonna be I'm gonna come and say I'm not gonna say like don't worry, we're gonna once we hit the like everybody's all, and I always used to do this as well. It's like when we hit this milestone, everything will be better and all this. I need to be the person to be like, it's not gonna get you need
Yeah.
to get comfortable with this.
Right.
Like, yes, we're going to get more resources and like these things are going to change, but like this is actually good. Like we're in a really good spot as far as the company and also like your professional careers. Like another benefit of joining a startup is that you can raise like in the ranks. I think as far as hiring executives, like look to hire 50% internally and 50% externally. So like you can go, and I also saw this a Shyp before. Like now, I had people join as like designers that are now VP design at
Right.
wherever, or they're making millions of dollars a year, a lot more than I'm making. That we're just part of that journey. So like that's what you can get, but
Right.
more or less like giving them the hard truth. It's like this is like, and also admitting like I don't have the solution. I look for you, for everybody here to have the solution to these problems and be like, this is really tough. I know this because I'm also going through it, but here's like, just kind of being real with people and not before at Ship. I kind of like try to sugarcoat everything. It's like, oh, everything's great. And like, oh, the numbers are down, but like, don't worry because
Right.
when this thing happens and we were trying to get like a partnership with eBay, it's like, when we do this, and it's like, then the company's going to explode. And like, now I'm like, I don't know.
Right.
I'm like, here's a lot of stuff that we're doing. And also here's a lot of the learnings that we've had. And it's up to everybody here to figure out, and here, and for like a CEO, like obviously you have to have the vision. Here's the vision I think that we should be going in, but like as things change, it may shift. But like we need everybody here to figure out how to like plug in all the different holes. And so I'm much more real with everybody. And I think that like the feedback that I've gotten has been pretty positive. And I don't know if that accounts for people putting in the 10 to 12 hour days or whatever that is, but I don't know. That's the way that I kind of do things now. I don't know. I'd be curious
Yeah.
how you at Winnie run things.
Yeah. I mean, I think so. I'm like uh, I'm very much a realist, maybe pessimist. I'm always looking
Hey,
for
that could be
like,
good.
what are all the things that could go wrong? And I'm stressing about them and I have all this anxiety. But I think that also drives me because I'm like, oh no, all these things could go wrong. I have to make sure we fix them all. And my co-founder,
Yeah,
Anne, is
yeah,
like the eternal optimist. Like she's like,
that's great.
Nothing will go wrong. Everything is going to be amazing. And this is everything we're doing is going to work out and be huge and massive. And I think that's been a really good balance because she sees all the opportunity and I see all the things that could prevent us from. And I'm constantly harping on, well, we won't get to that
Right.
if all these things go wrong. So it's a good kind of, I think either one of us alone would not be able to run the company. It's great
Right.
that I have a co-founder. Are you a solo founder?
No, I have a co-founder as well. Yeah.
Okay.
Yeah.
So yeah, I'm like a big proponent of co-founders, obviously. Um, but yeah, we've always focused on, outcomes rather than time spent working.
Right.
And I
Right.
think now, we used to be all in person. Now we're fully remote. We don't have an office.
Yeah.
So we are really forced to be very outcomes focused and,
Right.
with engineering, we have a point system where they're pointing all the work. So it's a little bit easier to keep track of, how much people are getting done.
Yeah.
And not, I mean, if someone can get done more than everyone else in terms of points and they're doing it in fewer hours, like wonderful. Like, who am I to say that they need to spend longer on it?
Right.
But I think, it's harder in some of these roles where, you know, it, you don't have a metrics based system for seeing what that output is.
Right.
And with remote work, like you just have to be very trusting that people are, putting in the time and doing the best they can. I think that's, been a challenge for us because you really just don't know.
Yeah. Yeah. I totally agree. I'm curious, because also um, there's this Jason. So Jason Lemkin, if
Yeah.
anybody's listening, if you don't follow him, he actually tweets some of the best stuff out there. There was actually a couple tweets on that I wanted to bring up today, but one of them was the percent of a company, uh, the percent ownership by founders by a bunch of SaaS
I
companies.
saw that.
Yeah, so that was interesting, and I think that the latest company that is going public was going to be so it's Clavio. Anybody doesn't know who they are, they basically do email and SMS notifications for Shopify brands mostly, but mostly around e-commerce. But I thought, kind of bringing it back to what you kind of mentioned. So there was a number of people on the list that he published. So we don't have to get into percentages on that, but like I think that the thing that I took away from, well, not even that, but also just observing different relationships is that it could work really well either way. So there could be a solo founder and like really strong. So I think of like Travis from Uber would be a great example. Like super strong. Like he doesn't have, even though he does have co-founders, but like he is a CEO. Like he's a CEO. But it sounds like for you and your co-founder, like you guys kind of you run the business together. Curious on like how does that work? Are you typically the person who handles one side of the business? But also just to illustrate to people that like there's not one size fits all rule. Like it doesn't need to be like a single founder, a co-founder. I think Atlassian, well, Airbnb is another great like anomaly. They have like three co-founders that all own the same percentage of the company and all of that. But Brian typically runs most of the company. I'm curious, like how do you run that with your co-founder? Because it sounds like you have a really close relationship still,
Yeah.
and and she's a big part of the running the business today.
Yeah. I mean, we have pretty clear roles and responsibilities and also like pretty clear strengths and weaknesses that really complement each other. So she's
Yeah.
our head of product.
Yes.
So she's doing, all of the internal figuring out what we're working on and how that's going and everything we're building. And I really don't get a lot of say in that. I can point out things that I think are wrong, and I can say what I think is high priority, but at the end of the day, she's making those calls along with our VP of engineering. And I'm doing a lot of the other stuff. So I'm our head of sale,
Yeah.
and doing a lot of, customer and kind of outward facing things. And then, everything else that goes along with running a business
Yeah.
really falls to me, including like a lot of really annoying things that don't have owners end up being things that I have to do or train someone or hire someone to then
Right.
eventually take it from me. But I think basically the default is like if it doesn't have an owner, it's on me until we find
Yeah.
an owner.
Yeah.
Um, and I think that's, worked well with my like incredibly type A personality of, nothing can get dropped on the floor.
Yeah.
And Anne is definitely way more of the creative personality, um, and sees these incredible opportunities. I mean, she basically figured out the thing that had product market fit in our entire business model.
Wow.
But I think it's hard to do both. It's hard to have all of that, uh, you know, creative brain power that can sit and just figure out the solution to the problem,
Yeah.
and then also make sure that everyone is happy 100% time and
Right.
everything's getting responded to and, nothing is getting dropped and all the metrics look good. Like it's really kind of impossible to do both. And so we sort of have to divide things that way.
Yeah, that's really interesting, and also like totally different than so many other businesses are run. I think that the common like misconception that a lot of people starting off get is like it has to be done this way.
Right.
Even like because also if you like, and I know Sarah, you're big on Twitter. Like there's maybe this is actually even another topic. It's just like that everybody wants to like just in totally general terms is like this is the way you do something. It's like you want to
Right.
make a like your first $1 million, like this is what you need to do, or like this is like the recipe for like building a business, and it has to be you have to go get a co-founder and all of this stuff. And um oh, somebody, sorry, I'll cut this out. Somebody is just at my window. It's
Um,
somebody
I
trying to deliver
I
this.
I
But yeah,
agree. There's no one way, and I think people, some people don't have co-founders, but they have, like we have this VP of engineering who's been with us since the beginning, and she's also very much like a third co-founder to us. But I do think it's really hard to be the only person responsible
yes,
100% of the time, and so I think it's sure, people have done it, but it's incredibly helpful to have someone, like you were saying, people get burned out and people have
yes,
other things going on in their
yes,
lives. And sometimes you just need a week where you kind of step back and let someone else take the reins. And if you don't have someone who will hold the company as precious as you, it's a
yeah,
little bit challenging. I mean, I've definitely over the 7.5 years of running Winnie, have had a few different instances where I've had to step back.
of course,
And while I could still be involved and do work, like I couldn't be at my 150% that I normally am
right,
at. And if I didn't have a co founder, I think it would have been really challenging.
yeah, um, yeah, I totally agree. And also just going back to that initial thought on like how everybody makes it, it's like a recipe. There's also like the complete opposite, and I'll use Travis, even though he has lots of flaws, as the counter example. Like, I don't think that he ever took a day off that he was not at like 150%, um, and he was the person that you would go to for everything. So
Right.
and that's for me knowing him a little bit, and also knowing some people within Uber. Um, and like he just couldn't, he did not have an off button. And so like my point is just instead of it needing to be like you have to have two co-founders. One needs to be like the um the visionary and the more managerial person, and the other one needs to be the technical one, and all this. Like, there could be so many different combinations of like the founding team or how you run a company. Like, look at Airbnb, right? Like, they had Brian Chesky, who like came out of design school, so I don't think he had any technical background. And then he had two other co-founders, and they actually were together until they IPO'd. And they all had and they had the same ownership percentage and all of that, and they had their own places within the company. And like at other companies, is just a single person that's running everything.
Yeah.
And like Jeff Bezos would be another great example. Like, he's like the did he actually have co-founders? I think he might have, but like he was the one that you went to. But I think also the Atlassian founders, like, they're pretty much like a lot of the what you hear is like a lot of joint decision makings and everything like that. And so I think like that what people read and what people hear on podcasts like this is that it needs to be done this way, but it's like in the reality, it's like everybody figures it out like their own way, and there can be many different ways to success.
Yeah. I also think, a lot of times there's someone who's more outward facing that may get, more of the credit. Like, probably more people have seen my name associated with
Right.
Winnie than Anne's name. And that's like by design. That's
Right.
because that is my job at the company to
Yes.
be in charge of a lot of that. It fits a lot better with my strengths and what gives me energy and what I enjoy. But it's not the case that she is doing less.
Right.
In fact, she probably deserves way more of the credit. But that's just how we've divided things up. So a lot of companies, they have that one person, and you might think, oh, they're running the ship, they're doing it all on their own.
Yeah.
When
Yeah.
really there might actually be a lot of help and support behind the scenes, that they're just not, press facing.
Well, I think that's always the case. Like, the front person for every business. Like,
Yeah, right,
you can't do everything on your own. Like, of course, there's a huge team if you are
right,
successful that is backing that up. And that's actually one thing that I think that a lot of people fall into the trap. And I've worked with some people that like they the company starts doing well and they're not getting the actual public recognition, whether
right,
that is within the company or externally. I've had people that I've worked with that just kind of like, if they're not getting the accolades, then they just like, they may act out or they may do different things and they just can't actually handle it. But ultimately, like, you need to really like lock arms with everybody, and like it ultimately doesn't really like, yes, is the CEO going to get all of the public praises? Yes, but also if when things go wrong, they're also going to be blamed for everything as well. So,
right,
but ultimately, you need to be okay not getting acknowledged, and that also goes to like when you're running a company. I'd say that both of us probably fall into that category now with Airhouse and Winnie. Like, we're in industries that we're not making the news.
right,
We're not AI companies. We're not the top of the list for investors. And like, it's okay that we're not getting acknowledged, and like we're still running and doing the right things for our business. But a lot of people can't handle that, and I think that's where a lot of people actually do fail with that recognition part. They think that that is like the outcome, but it's not. It's about building something, probably hopefully that didn't exist before in a different way, and solving people's needs. And not worrying, like, who gives a shit if you like the best managers are the ones that like when something goes right, they're the first ones to that call out other team
right,
members and say, I didn't do any of this. This is all because of an amazing team. Um, but still, that manager may get the accolades or whatever that is. Like, those are the types of people that you really want to. Those are the types of people that I really want to work with. And but the opposite, I've seen so many people that just like spin out of fucking control when they're not the ones getting the accolades. And it's like, I don't want to work with you now. And so like, you're not going to be part of this process. So like, I'm going to fire you. Like,
Yeah.
I've
We
had
don't
that.
we don't have that problem at Winnie. Everyone is, like, so humble and so, does like, doesn't wanna be out there. I'm actually, like, begging people to get out there, like, can we have other people that wanna be kind of externally facing? But, um, no, I think that's also, we just have a culture of, like, really, uh, really humble people,
Right.
um and, but I do remember, back when I worked at some other companies,
Yes.
there would be fights over who would
Oh,
get their name on the blog
oh my
post announcing the
God.
feature. And,
Oh,
it was just like, I understand people wanted that recognition for their career and for their resume, but it would just that was all they cared about. And, you kind of lose the purpose of what you're there to do. So I'm really glad I haven't had to deal with that at all for the past, 7.5 years. And we've had the opposite problem of like, come on, someone
right.
else want to be on this blog post.
Right. Right.
But
But
yeah,
also those are the people that you actually don't want to work with as well. Like, like to me, that's a great example. Like even in big companies, which before I worked at big companies as well. Like those people that want to get their recognition and all of those, like you just don't want to work with them. And so like life is long, your careers are long. Like
yeah,
what I think those types of moves are very short sighted. And like just do the best work you possibly can do. Prop up the rest of the people in your team, the best you can. And like that's how you build like a really long like even as like a founder, like I think that for me, me at least, like I'm gonna found multiple companies in my career. I look at this like from a very long term perspective. I look
right,
at like what I do in every single company. So like Shyp, for example, we failed. I wanted to make sure that like I did absolutely everything I possibly could do right, like when things were going bad, and not do anybody any harm, including like our partners or anything like that. Like, there's a lot of people that like when things go wrong, they're just like they kind of exit out or something like that. I knew like this is going to be part of like me building my career in like building companies, and so like I think of it as a very long journey. And people, if you're not a founder or whatever, you should look at that the same way. And like that includes like think of the people you want to work with. It's people
right,
that like are extremely like genuine, like they don't need to have their names on the blog post or internally, and they're the ones that get all the recognition and all that. They're
right.
the people that are like kind of leading everything, but make sure things get done. But they don't need the recognition. I'm just looking at time here. Let's move on. The last thing that I wanted to kind of bring up. So I'm also gonna this is another Jason Lemkin tweet that he had, and also wanted to get your take on this as well.
We got to
Uh,
get him on the pod.
oh, I think I'd love to obviously. We'll
We'll
eventually
work
get
on it.
yeah. So right now for everybody listening, we get like between like 1 to 2K listeners per episode. When we get to about 10K listeners, apparently that's when we could start getting some sponsorships and then actually somebody to run this thing. And then hopefully it'll get larger from there. And then we'll get some of these guests on here. But one of
Yes.
the things that he had on here, so one of the big misconceptions about SaaS companies is that they never have really been truly profitable. So he posted, there's a tweet that he has about all of or a bunch of different public SaaS companies, Toast, Monday.com, Snowflake, MongoDB, HubSpot, basically goes through like as the market has changed from like growth at all costs to actually focusing on profitability. He lays out 2022, 2023, the differences between like them changing based on what the market has said. So like some of it is like based on like free cash flow, some of it's like adjusted EBITDA or whatever, but it really shows that like when constraints are placed on companies, which obviously the market has placed on public companies as far as like their stock price and going up. It's like gotta get more profitable. So like that's where all the layoffs came, unfortunately. But it's really showing that like these massive like SaaS companies where there always was the misconception is like they'll never be able to get profitable, all that. That's completely untrue. The other thing that I wanted to bring up with, and I know he's talked a lot about this, is like SaaS, and I'd say that software more in general is just way fucking bigger than we ever had anticipated. And also like specific areas that you wouldn't think of. Like for us, it's like we're a marketplace for 3PL. So it's like very specific. And you may not think that's a really big like opportunity potentially. And also want to turn it on over to you, Sarah, as far as like what you guys are doing at Winning. Like I'm sure that you've gotten so many different investors like saying that your market size is not big enough. And I'm like obviously like childcare is, but like like you're a marketplace for childcare providers. Like, is that a really big market? Like what do you take from like that, and also maybe the constraints that have like that kind of breed companies to do different things, and just the overall
Right.
opportunities in like these software businesses?
Yeah. I mean, so like SaaS businesses should be very, very profitable businesses because you're making software and then you're selling it and then your
Yeah.
cost should be basically nothing. It's like AWS servers to
Right.
run the software that you're selling. But the reason they've historically been so unprofitable is you know, their whole model revolves around sales.
Yeah. Sales
Um,
and marketing.
and, to actually get that company to buy your SaaS software, you have to pay a lot of money and you're not
Upfront.
upfront and
Yeah.
you're not necessarily recouping that in the sale, and they've kind of ballooned out of control as funding has ballooned out of control.
Right.
But in theory, they could be very profitable if people could, find that um, SaaS product more organically or for lower cost, and you didn't need, such high cost to acquire customers. Uh, so, we've really taken that to heart at
Yeah.
Winnie. We have, basically pay nothing to acquire our customers, which are daycares and preschools.
Yeah.
Um, and I really think that's the only way in a more constrained market to make the business work. And I think, the reason that we haven't seen a lot of huge IPOs in the childcare space is,
Yeah.
you can't deploy the like traditional SaaS model when you have a very kind of limited TAM of businesses to sell to. So I do think, the TAM for childcare is constrained. That is like feedback we've always heard from investors. It's still massive. I mean,
Well,
60,
what is it like percentage of spend for households? What is it?
oh, I mean, households with kids
With
under 5, it's probably at least like a quarter of
Yeah, it's
their income.
huge. It's
But
huge.
for I think, for our customers are daycares and preschools. So,
Yes.
that's a $60 billion market in the US, and then
Right.
it gets to hundreds of billions if you look outside of just daycare and preschool and you look at things like private school or nannies or babysitters or kind
Right.
of add these adjacent areas. And then, of course, if you go outside the US, it gets even bigger. So it is still massive. We're
It's
talking
massive.
hundreds of billions of dollars, but it's constrained in that not everyone can be our customer. And so I do think, the traditional SaaS model of like just go have so many salespeople and plaster everything with ads, it doesn't make a lot of sense in these kind of niches where
Right.
not everyone is going to be your customer. You can't just buy a billboard because it doesn't apply to most people.
Right.
Um, Now we're unique in that we're also a marketplace, and so we have parent users that we have to
Right.
acquire as well. But I do think there's, something to be said about this hopefully new era we're entering where people will be a little bit more constrained about how they acquire customers.
Well, and I think that's if you look historically, like these are the best times for these companies to be really founded because right now it's like everybody's building the foundation, which they're then gonna like use hopefully additional if they're a venture back company to accelerate their business. So if you do have some way that you're able to acquire customers for less or you're whatever, you're gonna apply that same capital to that better foundation versus if you had unlimited capital. And this is the mistake that I had at Shyp. It
Right.
was like we literally had billboards all over New York. I think it was like the campaign cost like 400 grand or something like that. And we had like, I think it was like, I don't know, it was something like 20% extra month over month growth from that's something that stupid. But that's how much money we had at Shyp as far as like we could
Right.
deploy all this stuff. So I actually love this era as far as like going back to Jason's tweet is like, yeah, the markets are constraining these companies and like look at how much like when they have to, yeah, and unfortunately a lot of the stuff is like layoffs and all these things, but like there's some really good businesses out there if they are properly constrained. And I think that
Right.
if you the earlier you could do that, build that into your like the basics of your like fundamental business model, like the better that you're able to actually use capital more efficiently versus just being like in the wild west. And that's why I myself have always tried like the second go around tried to raise the least amount of money versus the stage we're at. And even though that's very uncomfortable, and maybe that's the reason that a lot of my team is working 10 to 12 hours a night, but it forces you to then what is the most important stuff you got to work on?
Right.
Like you can't do everything. You can't do the billboards. You can't do like work on every single product feature and all those types of things. So I think that's like one of the big learnings that I've had. And now you see it going to like the public markets and also I would say for like a business like yours, like there's going to be like an IPO in technology in the childcare space. Hopefully it is you and you're wildly successful. And but like of course there's gonna be. Like it doesn't make any sense that there's not gonna be. Um
God, I
so
hope so.
yeah, well, yeah, we all do.
We'll take
Um
anything.
yeah, yeah, of course. But I think that that's what people get wrong. And also a lot of entrepreneurs, they follow the hype train, AI cycle. That's the hype cycle right now. But it's the businesses like mine and yours right now that are going to be the ones that hopefully are going to be the actual more successful ones. Because we've been building and building and building, and like we have customers that continue coming like and paying us money and
Yeah.
profitable and all these different things. Um, and also there's a lot less competition in those markets and everything like that. But like it just kind of shows you like as this tweet like so like on all of the different companies, they all touch different sectors of the economy. All sectors are going to be impacted by technology. And so I would just like for anybody listening, like have a unique take on some like different market and like just like go heads down and build for 10 years and you're gonna have something hopefully really exciting for a lot of your customers. Do you want to end there, Sarah? Any last thoughts?
I have to get back into the arena.
All right, let's do it. Thanks for listening, everybody, and we'll see you next time.
Right?
Bye.